Greetings, everyone. Okay, so I'm going to be as succinct as possible in this video. This is day one of me trying to upload every day. I will figure out something to upload, some regular, some irregular kinds of uploads. This one would be an irregular upload. Today's video is pretty important. It's important to me, at least, because it solidified for the short term, my rationale to go short on the market, or as you'll see today, not necessarily short. So I'd like to start off with this, right? I am not saying the market's going to crash. I am not saying that you need to sell everything, right? This is a trader-centric video, not necessarily an investor-centric video. So if you don't know options, or if you are an investor, right, I'm not telling you to sell your positions on anything. I am not selling my positions in Palantir. I am not selling my positions in my other longs. But I am trading the market using options a certain kind of way. And in this video, I will show you a little bit of technical analysis on how I've come to that conclusion, and what play I made today. And it may surprise you a little bit. Anyway, let's get into it. Let's get into it. So I'm going to share my screen. All right. So actually, let me start with my PowerPoint first. Okay, so this is a PowerPoint slide I basically copied. Now, what you see here is right here. This is the play that I did today. I talked about it in my Discord briefly and let everyone know that that's what I was doing, and I'm going to briefly talk about it today. Basically, I sold 4 credit spreads. They're called bear call spreads that expire on 28 June. That's what this line goes from today to 28 June. And this particular credit spread, bear call spread, if I'm correct, and if the NDX, which is the NASDAQ 100, is not above this line on 28 June, well, then I will make $13,088. However, if it is, and I've held it as that long, which if I'm wrong, I will get out of this trade. But if I did hold it all the way and was wrong, meaning it NDX went above this strike, which is 19,100, then I would lose 26,912. So some of you may be saying, you know, Gabe, I thought you were bearish, right? That's a bear call spread. Yeah, I know I am bearish, right? But I'm going to show you why I'm bearish exactly. But this is just the first play. This is me putting my toes in the water, if you will. The great thing about a bear call spread, and now I'm going to go to the trading view. The great thing about a bear call spread, right, is that from here, right, this is today's close. From here, the market can do this, go up, but on June 28th, close right here, right, which is below the 19,000 strike or price. If it does that, right, if it goes up but doesn't close above 19,000, I will make money. I will make the how much was it? I don't even remember. $13,088, right? So in this first play that I'm doing, the market can go up, the market can go sideways, or the market can go down, and I will still make $13,000. The only way that I lose is if the market does that, right? If the market closes above this line on that date, I will lose on that play, right? So that's a bear call spread. But now let me show you why I'm bearish, right? Let me show you why I'm bearish. I'm gonna go ahead and take off my Fibonacci lines really quick. Excuse me, not my Elliott wave lines, but I will get into Elliott wave in a second. So I have a rule, and anyone in my Patreon that has been with me long enough and we've done technical analysis, I was like, there's many ways to confirm something, but one of the ways to confirm something are closes below a certain value or line. In this case, this rising wedge, right? This rising wedge right here, this rising wedge, which is right here, this rising wedge, has now closed 1, 2, 3, 4, and today is the 5th. It has now closed 5 days under the rising wedge trend line, right? So that is what made me dip my toes in it today. I am now bearish. There's a couple other reasons why I'm now bearish. Now I'm going to turn on my Elliott wave, right? And Elliott wave indicators on TradingView, you have to double check them, right? Because sometimes they have to repaint and sometimes they're not correct. Well, this particular indicator is telling me that we have just completed the 5th of the 5th. And that is very, very important. And I agree to this, right? There's one big rule on Elliott wave, and that is that the 5th wave cannot be longer than the 3rd wave. The 3rd wave is usually, but not always, the longest, right? So in both in the major move and in the minor move, they both have concluded that this is the top of the 5th, and now we are going to our A, B, C downward patterns, and then, you know, I could be wrong here, but we might be going into the corrective pattern. So why do I have these Fibonacci retracement levels highlighted? Well, that's because they're very important. The most important Fibonacci retracement levels of a reversal, where reversals take place, are the 38.2, the 50, or the 61.8. Now, if you're asking me, well, it's a 31.2 or 50 of what? Well, that's of the entire move. If we measure the entire move that started down here, right? If we measure the move, it starts here, right? We will see that from 0 to 100%, 100% being the 5th one, we have Fibonacci retracement levels. So in order to get you the numbers to align, I have to do this. There we go. Okay. So as you see, when I do the Fibonacci retracement tool, these are the 38.2, the 50, and the 61.8. So they align. And I'm not even saying it's going to get there yet. I'm not even playing the market as far as shorting it. Right now, my bearish play is simply, I think we're going down, so I'm going to give myself a little bit of cushion to be wrong by selling a bear call spread that says if the market does go up, it's not going to go up this much. Now, to be completely honest, if we get past this level, right here, I will probably close out this bear call spread if it happens in a quick amount of time. And the last thing I'm going to do is, if the market starts to go down and I start to make other plays, the great thing about options is you can close them out or spreads, you can close them out at any time. And if I am up 50% on this trade, that's about what, $6,500 in less than a month, I'm going to close that one out too. So basically, you know, to make this video succinct and kind of short, because of the way that price action has closed out on this 5th day below this trend, I am officially bearish. So now I decided to go live today. So thank you to the 6 people who are here. How you doing, Paul? Hey, man. So yeah, if anyone has any questions on anything that I went over, you can go ahead and ask it and I'll answer it. I'm not doing like other stocks or technical analysis. I'm going to keep this video pretty short. While I wait on those questions to come, if they come, you might have noticed these two yellow lines, because what I also did here is I did what's called a iron condor, and this iron condor expires April 30th, and it's a debit spread iron condor. So I'm just saying that I'm expecting a move either 2.19% or greater to the upside, or 2.22% or greater to the downside by 30 April, so that I can make money on this iron condor. This is a debit spread iron condor. And this over here that I did was a credit spread. It was a credit spread right here. This was a credit spread. This is a vertical credit spread. And yeah, so ask away if there's any questions. If they're not, that's fine too. I'm not popular yet, so I don't expect there to be any questions. So I'll wait a couple more seconds, and then I'll call it a day. This video will have been over in less than 15 minutes. That's a good thing. So I guess I'll start ending it with this. If you kind of like what you hear, or if you are trying to learn options, I would love to be the person to teach you options. I'm going to put a link to my Patreon in the I'm going to pin it as a pinned comment, and I'll put it in the down below. Right now I'm doing an introductory, just $10 to join the Discord. Now it's the basic level. But if you don't want to join and you still want to learn, I'm going to also put a video up that I shared with everyone that I used to charge for this, but I decided to make it free for everyone. If you don't know much about options, it's 2 hours long. This is a very detailed and comprehensive, fundamental way to learn about stock options. It's absolutely free. It costs you nothing. I'll put the link to that below. And if you really want to learn, I highly, highly suggest that you do that. Well, everyone, since there are no questions, which is cool, thank you all for watching. And if you're catching the recording, feel free to drop a comment and like if you like it. Don't like it if you don't like it. I'm not going to beg you. But other than that, you guys, have a great week, and I will see you tomorrow. I'm going to post tomorrow as well. Something. Bye-bye.